One of the most crucial aspects of protecting your financial future is saving for retirement. While programs like Social Security can be beneficial, they are frequently insufficient on their own. This is why it is critical to have your own retirement funds. You could be asking how much money is enough. For example, could you live on $1 million? Let us investigate. To determine how long your money will last, first calculate your living expenses. Fixed expenses are those that do not vary from month to month. This could include rent or a mortgage, insurance charges, and utilities. Add up your monthly and annual costs to see how much you spend. Variable expenses are those that differ from month to month. Travel expenses, healthcare bills, entertainment, and charitable donations are all examples of things that could fall into this category. Because these expenses are fluctuating, you will most likely need to make a monthly budget for them. If you hit that limit, you must either utilize money from another budget line item or skip the purchase. The following difficulty is determining retirement income. Because you may have numerous sources of income, this may be more difficult than calculating your income while working. For instance, your retirement income could include Social Security, pension plans, and savings for retirement. The good news is that Social Security and pension benefits do not fluctuate from month to month. They may include annual increases in the expense of living, but their relative consistency makes planning around them easier. Retirement funds, especially if you rely on assets, might be more difficult to plan for. Another issue of retirement planning is calculating the length of your retirement. This is a difficult issue to answer because numerous factors might influence life expectancy. Estimating your life expectancy, on the other hand, is an important aspect of retirement planning. People are living longer lives than they used to, so plan accordingly if you expect to live for several decades after retiring. In the United States, life expectancy is currently at 77 years. Aside from life expectancy, you should think about your current health and family history and how these will affect your life expectancy. Finally, to determine how long your money will last, utilize an inflation calculator. The following stage is to decide on an investment plan. For example, your portfolio may be more conservative, or it may be more aggressive. Here's an example of a $1 million retirement portfolio, depending on your strategy. With a conservative portfolio, your assets will primarily consist of low-risk investments. For instance, you may have 50% bonds, $500,000, 30% cash, $300,000, and 20% equity, $200,000. A conservative portfolio's purpose is typically asset preservation rather than wealth creation. As a result, you might prefer to invest in blue-chip firms that pay dividends rather than growth stocks. A balanced portfolio may be suitable for retirees seeking a combination of growth and income and who are willing to tolerate some risk in exchange for higher returns. As an illustration of your asset allocation, consider the following: 50% equity, $500,000, 30% bonds, $300,000, and 20% cash, $200,000. This portfolio has a significantly higher allocation to stocks, with cash becoming the lowest amount. A well-balanced portfolio often consists of a mix of stocks, bonds, and cash. It focuses on diverse investments that provide a balance of growth and income. For retirees with a longer time horizon who are ready to take increased risk in exchange for larger potential returns, an aggressive strategy may be appropriate. If you have a $1 million aggressive retirement fund, equities become the focal point of your portfolio. 70% of the stock, $700,000, 20% bonds, $200,000, and 10% cash, $100,000. An aggressive portfolio may contain a combination of high growth and small cap stocks. Some daring investors may pursue alternative investments such as commodities or precious metals. It's crucial to note that these are only examples. The best investing strategy for your retirement portfolio will be determined by your own goals, risk tolerance, and time horizon. Before making any major investment decisions, especially when it comes to retirement planning, it is always a good idea to consult with a financial advisor. How long $1 million will last in retirement is determined by factors such as your spending, retirement income, and the length of your retirement. A $1 million portfolio could continue for many years if you have sufficient income from sources such as a pension and Social Security. This is especially true if your expenses are low and you don't have any big healthcare costs. However, there are numerous things to consider. It's best to speak with a financial expert who can help you create a personalized retirement plan. Working with a certified financial planner to plan your retirement is the best approach to create a plan that fits your goals and risk tolerances. How has the above information helped you with your future retirement plans? Has this video given you any new perspectives? Leave a comment below. Take care and remember that your money matters.